side, we're holding at the weekly trend, right? So the weekly EMA bands are still intact. BTC is still above them. Now that can be good or bad. The way I would view it is, if you're analyzing a trend, the trend is the trend until it breaks. Now that's different to trading, because if I was holding, and I am holding Bitcoin here, I'd think, okay, cool. Looks bad on lower time frames, potentially showing some weakness, but the weekly, when you zoom out, looks fine. But the weekly EMA bands were also fine over here, right? Bitcoin trended back down into them, moved back up, trended back down, actually went below them, chopped around for a bit. The weekly bands at no point here ever turned red. However, from the first time we moved up to the peak in April, it didn't break out again until October. That's 6 months. We first came up to the top of this in March, so obviously 6 months would be September. And that could all happen without the weekly bands even crossing red. But that could mean we go lower and higher and lower and chop around. It won't happen like that. Well, anything can happen, but I wouldn't expect it to play out the exact same. The point is, you have to combine your higher time frame and lower time frame view. On a higher time frame, Bitcoin is consolidating below all-time high, below the previous all-time high. The bands are green and strong currently. And the thing you need to see if you're a bull at that point is you need to see more consolidation. You need to see it actually hold. In my opinion, the kind of January 2021, quick dip, gets bought up, rips to new highs. I think that's been pretty much invalidated by the number of weeks we spent up here. So you came up, you had your quick dip, you tried to break out again, it's fallen back down. If it goes in the next week or two and breaks out, that wouldn't surprise me. That would probably still keep this sort of strong uptrend intact. But it's starting to become more like the March, April, May, or the October, November, which doesn't mean that we have to crash all the way down. Like, I don't think China are going to ban crypto again, and I don't think the bull market's over. That's what these two were, right? China banned crypto, and we had our first big deleveraging of the cycle, and then obviously the whole market was just done in November. I don't think from a cycle standpoint we're in the same place with either of those. And I think we're going to see something that we haven't seen before. We're going to see something different, because that's what Bitcoin tends to do. History doesn't repeat, right? It often rhymes. And the way it rhymes in crypto is the market follows broad 4-year cycle, or has done. It follows broadly a bull and bear cycle where you've got swings from extreme fear to extreme greed. And right now, you need to see volatility really disappear, right? The price has to start moving nowhere and getting choppy and going sideways. And if it does that, that's when it's then setting up, quite likely, a base for it to go higher. If Bitcoin spends the next 2 or 3 weeks between 60 and 65, but isn't, and attempts, this is important, and it tries to break 60 but it can't, right? It actually has to push back down again, go to a daily, right? If it actually has another attempt to stab at 60 and can't break it and chops, and so even something like this, and then you start to see it moving up, that's a really good sign, because there's already a spot premium, right? So Coinbase, Binance Spot are trading above the perps, right? So the leverage and the short term over leverage has been taken out of the market, which is healthy in one sense, but it also indicates an absence of risk. So you don't want to see an extreme perp premium, because that means the market's being pushed aggressively by perpetual futures, which means spot is not driving the market. Typically, if spot's not driving the market, that's less sustainable for rallies. But the good part is we've had funding flip negative on several exchanges. We've seen a big flush out of open interest. We've seen alts get crushed, obviously. And we're seeing a spot premium return. So if we were to spend another week or two in this area where we can't get above 65, but we can't get below 60, I would expect that spot premium to only increase as people stay short, because it looks like it's going to break down, right? They stay short or they add shorts. But if it can't break that level, then you've got like the beach ball being held underwater, that analogy, where It's trying to push down and push down and push down, but it's being held and held and held. And then when you get the inevitable reaction of that, you probably see an explosive move to the upside. Because don't forget, it's a bull market. Don't forget that Bitcoin wants to go up, right? That's the default position of BTC in a bull market, is it wants to go up. Don't forget as well that we're ahead of schedule. If you're a 4-year cycle maxi, you'll know we're well ahead of schedule. We hit the all-time high before the halving, which has never been done before. And if you compare 2024 to 2020, which is the previous halving year, right, in May of 2020, April of 2020, we were way down here, right? April 2020, we were at 6, 7, 8K. Obviously, all-time high was 20. And so, for Bitcoin to go down more, it wouldn't surprise, because we're still ahead of schedule. For Bitcoin to go sideways here, it wouldn't surprise. And even for Bitcoin to go up, it wouldn't surprise. Nothing should ever surprise you with BTC, but you should play the market based on what's actually happening. And what's actually happening currently is we moved up into the highs. There was a lot of buying above 60. There was a lot of buying above 69, which is really the level that you need to be watching, because this is the old all-time high. And so everything up in this phase here in this red box, and a lot of it driven by the billions into ETFs, those buyers are underwater. And when buyers are underwater, late buyers only, right? Nobody who bought Bitcoin in October, November, December, January, or February, no one who bought Bitcoin there is underwater. People who bought Bitcoin late from 11th of March onwards, above 69, they're underwater. Now, how many have capitulated already? Probably a few. We're starting to see, and we have seen now some outflows from the ETFs. Another outflow day yesterday for ARK, 12 million. Weak inflows from BlackRock, Fidelity, and practically almost nothing from the rest. And Grayscale continue to sell GBTC. So there's a third day in a row of red net outflows. Not massive, 50 mil, 30 mil, 50 mil, but it's not positive. And if you remember back just a few weeks ago, we were having hundreds of millions flowing in every day. So we can only, and I'll look at this full data here, we can only deal with the information we have. But when we were going up into these highs on this last push from, late Feb into mid-March, which is over here. So from late February, 22nd onwards, we had super high flows. We had 200 mil every day, right? Minimum. It was 250 average. We had 500s, we had 600s. We had some lower ones, we had some 500s, 600s, 300, 400. All the way up till middle of March, and exactly at the top, 15th of March, right? Here, 15th of March is where we had our last big day, which was 200 million. Then we've had consistent outflows, some inflows again, but since the 15th of March, the net has been outflows, right? And so we had hundreds of millions every day pushing us up to here. We're going to need probably something similar to push us beyond all-time high next time. And I do think we get there. I think we will make that. I think we will return to a bullish market at some point. But the market doesn't just move in one direction, right? It's not up only, and it's not down only. And you have periods in between where there's lots of chop and consolidation. The chop is a necessary part. Chop, if you want to view it as a transfer of coins from hands, from weak hands to strong hands, okay? Everyone can stay long when price is going like this. But then when it goes into a phase like that consolidation, you're seeing the coins move in here, right? So everyone's happy to stay long in this part. But in this part here, the longer it spends there, the worse it looks, the choppier it gets, the more bearish it is perceived to be. That's where late entrants panic and sell, or get bored, or give up, or get liquidated, and those coins transfer over into the hands of stronger buyers who have a longer term view and who don't panic or don't get liquidated. If it's not going to go down, and here's the thing, how do you shake people out? You shake people out either through strong leverage liquidations, like you saw across a bunch of alts, where they go down 70% in 2 weeks, right? Or 50% or 40%. That's going to panic and take out most people who are trading with a short-term mindset and using leverage. The other way you shake people out is through time. And, the time-based capitulation. You can see it over here. Best example is from April to October. This was time-based. It was mostly down from April until June. We had like 4 or 5 days of green. Then it was mostly down again until August, September. And then we started to rise back up. And people just got bored out of the market. And they gave up. They gave up on their bags. They couldn't have patience. They couldn't wait. They couldn't log in every day and not make bad decisions by taking stupid trades. So one or the other is what I expect to see. If you see Bitcoin just roll over here and push below 60, you're going to see mass liquidations. You're going to see people really give up. And there's smart money wants this too. Big players, whales, fucking Larry Fink, whoever you want to call it. It's not one person, it's a group. It's everyone. Everyone who's smart money. They would love it to have a deep, massive, high volume sell-off into 58, 56, 54 in a fast move. Because that's going to create a lot of stop outs for people who are long with 60k as their invalidation. It's going to create a lot of liquidations of people who are forced out on leverage. And if that happens quickly, then you can actually see a quick reaction and rally back. So if you were to see a strong move down, followed by a pretty quick reclaim of 60, that's when you can just see moon again. Because we've had the big sell-off, the big capitulation. If that doesn't happen, you're probably going to see something more of the slow grind, like the other path. And alternatively, or even along with it, you can see moves up too. But I'll talk about in trade of the day. Any move up that we see, if we see a strong rally up to 67, 68, up towards 70, that's mostly going to be driven initially by a short squeeze. And I'll explain how the short squeeze works, and then what you want to look for. If the short squeeze is going to hold and then turn into a new uptrend, you'll see that as well. So that's it. Don't overtrade it. If you are trading, lower time frames are best, right? It's not a place to be taking big swings or big position trades. Obviously, if you think Bitcoin goes a lot higher this cycle, and you're buying more spot, great. Be prepared that we might see lower first. But if you're buying to hold for 100k, if that's your expectation, 100k, you're buying spot, and you buy at 63 or 62 or 61, and it goes down to 54, that's just part of the game. If it drops down to 54, but then goes to 100, that's a dip. That's a blip on the radar. So remember your time frames. What chart are you looking at? Are you looking at the daily chart? Okay. Well, don't be surprised if there's a 5 or 10% down move before a 60% rally. If you're looking at the weekly chart, same thing. And if you're looking at the 1 hour chart, the 4 hour chart, the 15-minute chart, then understand you can't be getting onto the 15-minute chart at 63 and then expecting it to go to 54 and then 100. That's not a 15-minute chart move. That's a daily or a weekly. So you have to have your invalidation, you have to have your stops in, and you have to take profit, right? If you're in a 15-minute chart, which I'll talk more on daily trade of the day, if you're in a 15-minute chart setup, you have to have your invalidations based on the 15-minute chart. If you're long in the 15-minute chart here, your stop needs to be down there somewhere. You can't be having your stop all the way down here, right? Because why are you getting in here if you think it can go down there? Then you should be waiting for it to drop. And if you're targeting the highs, that's where you need to be taking profit. Like, you have to adapt your time frames. If you're getting long down here on the 15-minute because you see absorption at the lows, your target's liquidity above. Right? There's liquidity here, the stops up at this level. And if you're getting long there, your target can't be up here. Your target has to be wherever the liquidity is. Because what's your thesis here? People are shorting into these lows. The lows are going to hold. It's going to go over to the highs. So keep that in mind as well. Time frame is very important. Most people will get chopped up because they're mixing time frames. So keep an eye as well on the markets as a whole. Stock market, the dollar, bond yields, all of that will be, there's a lot of volatility, flip-flopping of opinions across the markets as people are trying to weight the probabilities of war, the effects that war is going to have on the market, and you see a lot of flip-flopping over the next few days and weeks as the market doesn't know where it's going. So keep that in mind as well. That's it. GM. See you all later. Live stream will be back. Usual time now. 4 p.m. UTC. which will be back to regularly scheduled programming. See you then.